Welcome back, savvy investors. I'm thrilled you're here because in this video, we're not just talking about investing, we're talking about transforming your financial trajectory for 2025. Imagine for a moment that you're standing at the dawn of a new year, full of potential. The question isn't, should I invest? But how can I invest wisely to truly grow my wealth? We'll cut through the noise, give you actionable insights, and reveal my exact thought process if I were starting my investment journey today in 2025. This is for everyone, whether you're in the bustling markets of London or the vibrant economy of New York. And remember, this is my opinion, rooted in years of financial education and real-world experience, designed to help you make your own informed decisions. First things first. If you're finding this content valuable, hit that like button, share it with a friend who needs a financial boost, and subscribe so you don't miss out on our next deep dive. Your engagement helps us reach more people and build a financially stronger community. Now, let's talk about a trend that's captured headlines and portfolios: the incredible performance of a select few tech giants. In 2024, we saw what many dubbed the Magnificent Seven continue to shine. Companies like Apple, Amazon, Microsoft, and Nvidia delivered staggering returns. It's tempting, isn't it, to look at those numbers and think, I'll just bet on those winners. But here's where my experience and history offers a crucial lesson. Think back to 2015, or even 2005. The top companies on the S&P 500 looked vastly different. Back in the early 90s, who would have predicted the rise of today's tech behemoths? Could you have foreseen that Coca-Cola, a titan then, wouldn't hold the same top spot now? The market is a dynamic beast, and today's champions might not be tomorrow's. Here's a question for you right now. What's one company you thought was invincible 10 years ago that today barely registers on your radar? Share your thoughts in the comments below. Understanding this shifting landscape is vital for your long-term financial health. The risk of putting all your eggs in a few baskets is that you might miss out on the next big innovation, the next industry disruptor that's just around the corner. So, if picking individual winners is a high-risk game, what's a more robust strategy for 2025? My friends, allow me to reintroduce you to the power of low-cost index funds. An index fund simply buys a piece of every company on a particular list, say the top 500 companies in America, the S&P 500, or even thousands of companies across the globe. Why is this so powerful? Because while the individual companies within that list might change, the overall market, historically, tends to go up over the long term. For over 100 years, the S&P 500 has averaged returns of around 10.53% annually before inflation. Think about that. Consistent, long-term growth without the stress of trying to predict which specific stock will win. Even the legendary Warren Buffett himself advises most investors to simply invest in an index fund. It's about broad market exposure, reducing your risk, and letting the collective growth of the economy work for you. Think about your financial aspirations. Are you saving for a home, retirement, or a child's education? How might a steady, diversified approach like an index fund align better with those long-term goals than chasing volatile individual stocks? Now, let's expand our view. Should you focus solely on the U.S. market given its recent dominance? Or should you diversify globally? Looking at the evolution of the global stock market over the last century, we see constant shifts. In 1900, the UK was about 25% of the global market. Today, it's around 4%. Japan surged in the 70s and 80s, only to see its influence wane. While America currently makes up a significant portion of the global market, around 60–65%, betting on its continued absolute dominance is another concentrated bet. Historically, the performance of America versus the rest of the world has moved in cycles. By investing in a global index fund, you're not just betting on one country or one region. You're capturing the entire global economy, riding the long-term trend of innovation and growth wherever it may emerge. This approach helps cushion you against downturns in any single market and positions you to benefit from growth worldwide, from emerging markets in Asia to established economies in Europe. For my friends in the UK, this is particularly relevant as the UK market currently offers compelling valuations. A global approach ensures you're not solely reliant on its recovery, but still benefit from any resurgence. For my US viewers, while your home market is strong, true diversification means not having all your eggs in one national basket. Quick question. Considering how global economies shift, what are your thoughts on investing solely in your home country versus a globally diversified portfolio? The final piece of this 2025 investment puzzle, and perhaps the most critical, is your time horizon. Investing isn't a sprint, it's a marathon. If you look at historical data, the longer you stay invested, the higher your chances of seeing positive returns. For instance, if you invest for just 24 hours, it's almost a toss-up, about a 52% chance of making money. Extend that to a year, and your odds jump to 73%. But if you commit for 10 years or more, your chances of winning soar to over 94%. This is why you hear financial educators like myself constantly emphasize the 10-year rule. The market is a wild ride with ups and downs, but consistency and patience are your greatest allies. Set it and forget it, allowing compound interest to work its magic. And speaking of setting it and forgetting it, consider your tax-efficient accounts. In the UK, we have ISAs, individual savings accounts, and pensions, like a SIPP, that shelter your investments from capital gains and dividend taxes. For my US audience, think about your Roth IRAs, traditional IRAs, and 401ks, accounts designed to supercharge your returns by minimizing your tax burden. Always prioritize maxing out these allowances before considering general investment accounts. My challenge to you: when was the last time you reviewed your tax-advantaged accounts? Are you making the most of these powerful wealth-building tools? Now, for a crucial insight that often gets overlooked. While investing will certainly make you rich over time, it's not the only lever for financial success. In fact, obsessing over an extra 1% or 2% return on your investments can distract you from an even more powerful wealth-building strategy, leveling up your income. Imagine doubling your monthly investment contribution from, say, $200 to $400. Or $200 to $400 by securing a promotion, learning a new skill, or launching a side hustle. That direct increase in your ability to save and invest often has a far greater impact on your total wealth than spending hours agonizing over minor market fluctuations. Your day-to-day life, your skills, your career, that's where you have the most control, where you can take risks and tear things up to generate significant returns. Then you plug those increased savings into the market and let it compound. Investing should be boring. Your income growth shouldn't be. So, as we wrap up, remember these pillars for your 2025 financial success. Diversify globally with low-cost index funds, commit for the long term, utilize tax-efficient accounts, and relentlessly focus on growing your income. These are the strategies that empower you to build lasting wealth regardless of market volatility. Don't just watch, take action. Like this video, share it with someone who needs to hear this, and if you haven't already, hit that subscribe button. Your financial future starts now. And speaking of what's next, stay tuned for our upcoming video that just popped up, where we dive into advanced strategies for managing your investment portfolio during economic uncertainty. You won't want to miss it. Until then, keep learning, keep growing, and keep building your financial empire.